Welcome to the Property Partners podcast, where we break down the steps to build real wealth through smart property investment. I'm Ross Lacane, buyer's agent, property strategist, and former top mortgage broker, here to share insights from decades in the game, alongside some of Australia's leading experts. Hello and welcome to the first edition of the Property Partners podcast. I'm joined with my co-host here, Munzurul Khan. Welcome, Munzurul.
Oh, thank you, Ross. We're so excited.
Definitely. It's exciting times for us in terms of, as well as doing what I'm doing in the broker space, the $1 billion broker coaching, I've just partnered with Munzurul and we're launching a buyer's agency business for KHI. And part of the buyer's agency, I'm going to be hosting a weekly podcast. And today we're going to be talking about the property investor pathway, which is basically the pathway to financial freedom. Everything has a system and property is no different. Creating wealth through property is around following a set of guidelines. And, myself being in the mortgage space for many, many years, dealing with billions of dollars in terms of transactions, and along with my co-host here, Munzurul, who not only has built his own sizable portfolio, but he's the top accountant in Australia in regards when it comes to property investment. And I know his KHI practice has been built on the back of that. So welcome, Munzurul.
Thank you. Look forward to it.
Yeah. So today what I wanted to talk about was, an overview, and we'll dig in deeper in terms of this over the next few months around this property investment pathway. Because to me, and I teach this to even some of the brokers that are coming through my courses, that you need to understand the system when it comes to property investment, right? So we're going to be talking about the pathway, which involves, education. It involves setting goals. It arounds having a strategy, and then it requires you to then execute on that strategy. And then, from that, it's the acquisition phase is really, really important. So I want to talk about the high level, and then we'll dig into more of the details as we go on in the following weeks.
Love it, because I see very often when sort of clients come over to our office, right, is that very often is as we see that people go straight to the result, and we sort of almost take them back a bit. We say, leave the result, and the results will be coming in. Of course, it is action-based, but let's take a step back and let's start with the goals. Let's understand where we are. Let's create a strategy in terms of what we wish to do, how we wish to do. Let's plan it out. It's not just that one acquisition. How do we look forward over 5 years, 10 years, 15 years? How do we start with the exit? How do we start with the retirement plan, right? And all of those things, you almost do it the other way around to reach into the end goal.
Oh, exactly. It's clarity and a plan is so important, and we've spoken about our journey because we're both property investors, and I think you get to a point and comes from experience. I remember you telling me in your journey, you almost were an accidental investor.
Oh, definitely.
when you started, and it's kind of it's the wisdom that over time that we've developed that we realize, hey, we can structure people's, and I know from a financing perspective in my mortgage broking days, it was, you can help people and having a plan even when it comes to your finances, right? A lot of people get stuck and they get at their borrowing capacity limits a lot sooner had they just taken a bit of time to work out, well, what are we actually trying to achieve in that longer term.
It's about being that resourcefulness, right? It's about not seeing a challenge as a challenge, is to see a challenge as an opportunity. How do we resolve that challenge? I remember that there's this forum that I went to, Jan Summers, many years ago now, right? The old Jan Summers sort of is writing 2 different books and walls of wisdom. And Jan Summers was saying that into the property world is that more you can resolve your challenges, is that more the reward coming in, right? So finance as an example, and we'll dig into all of those a lot deeper over a period of time, is that that there was a period of time that I was very stuck with the finance, and all mortgage brokers sort of says is that that's it, you can't buy anymore. This is it, be happy with it. And I had a whole bunch of properties at that stage, and I sort of said, no, I want to do more. Right, and this is where you and I, we were introduced by one of our mutual client, and then you started to see exactly the same thing, completely on a different view. And I remember that was the year, for the first year, that I bought a whole bunch of properties, whereas for the last couple of years is that I was stuck.
A little bit stuck, right? Yeah.
Nothing changed from my personal circumstances. It's more how you presented that story to the bank. Right, so yes, okay, you still have to have the fundamental, but very often it's about having that ability with a storyteller, right, and having the knowledge where you sort of back it up, and also I suppose having that discipline where we follow through with the action. Yeah.
So coming back to the pathway, if we think about the pathway and we think about client education, and we're going to be digging into a range of things. If I look on, high level, what do you think the most important things when you think of education? If you could name just 1 or 2 things that a client needs to know before they start investing, what do you think the key things that somebody should know?
I sort of almost sort of say is that in an ideal world is that before you invest, you give yourself about 6 months. You study everything which you study. Listen to all the different podcasts, right? All sort of different random podcasts, whatever interests you, just listen to it, yeah? And go into some of the forums, right? And keep reading into the forums, everything from all the basics of the properties in terms of the location side of it, in terms of goals and objectives, in terms of different strategies, in terms of the implementation side of it, in terms of your sales process, in terms of your retirement, succession planning, anything which you sort of find, you just read and read and read. And I say that to some of the younger people, the beauty of it is that because there's so much information nowadays, right, is that you would almost get confused after the first 2 or 3 or 4 months. And you would sort of say, hang on, Munzurul, you guys sort of say, reading, but everyone does it in a little bit different way.
Yeah.
So I'm confused, what do I do? You're on the right track when you're in confused.
Yeah.
Means that you are still on the pathway of learning. And then you would see, once you are sort of keep learning this, is that you would see at a point of time, you would say, okay, so I understand, everyone does it slightly different way, but that is right from my perspective.
Exactly.
That's what I want to do, right?
Yeah.
Whether it's a buy and hold, whether it's a buy, renovation, selling it, whether it's a development, whether it's residential, commercial, all has merit to it, right?
Definitely.
But my pathway is this, and when you sort of know what your pathway is, you are ready.
Exactly.
So the education side of it, to me, is the podcast, to me, is the forum, and to me, is reading various things, even books.
Oh, definitely. And I know before I had the ability to invest, I used to subscribe to the Property Investor magazine, right?
Yes.
Back in the day when we actually read something physical, right? That's showing our age at the moment. But, and the part of that I used to love, and I used to flick to it the first time I got the magazine when it came in the post, was the client journeys, right? The client journeys. I would read the client journeys because you'd learn so much around that. And and what gave me then confidence as a property investor was if someone else has walked that path, then I can walk it too.
Yep.
Right. And so I think coming back to what our theme of today is this property investment pathway.
Yep.
Yeah, the first step is that education. And, you've mentioned a number of books to me a number of times. So, there's some classics out there. Do you want to mention just, 1 or 2 of the classics if someone wanted to sort of get started in property investment in terms of where to start?
Start with Jan Summers, right? She only wrote 2 books, More Wealth and 101 Stories. Now, very old statistics written in 1980s. Don't worry with their statistics, right? But it's the underlying principle behind it. The richest man in Babylon, right? It's that all sort of, I read that for the first time many years ago, and I said, what's the big deal, right? It's all common sense. All it says is that you earn $100, you set aside about $20 first, and then you assume that you earn $80, go and enjoy your life with $80. And then all of a sudden you would find that your lifestyle is still the same. Don't do it the other way around, that you sort of plan to save $20. Savings comes in first and then do all the rest of it. Don't overdo the savings. Don't try to save 40%. It doesn't happen. Don't undercut yourself. Don't go to 10%, right? All those things when I was reading, I was like, yeah, that makes sense. It's a bit of fake common sense. What's the big deal, right? But it's a book that when you read it over and over again, every time you take away a bit of a nuggets of goals, right? And you sort of say, wow, now I understand. And then you read third time, I was like, hang on, I think I truly understand now.
Yeah.
You understand? Similarly, I authored Napoleon Hill, and I'm a big fan of Napoleon Hill, right? And a big fan in the sense that it's sort of, Napoleon Hill is the author who probably expanded my mind for the first time. Say, being born and brought up in a family where all my parents, uncles and brothers and nephews, they're all academic. So we don't really discuss money in there. Money is not classy enough to discuss in that family, right? And I think Napoleon Hill is the one who challenged first time, saying that it's not so much the money. Money is still a media. And whether you do a lot of goods or whether you do silly, is that it's all into yourself. And all that money does is that it gives you that, I suppose, that freedom for you to do what you wish to. So you do things in the right way, but money giving you that ability as such. And what Napoleon Hill taught me quite a bit in terms of his writing is the ability to dream. So that example that you sort of said is that I used to be reading all the sort of the success story, right? Part of the reason why we do that, and I used to do that as well, right? I used to love reading first thing I would read are those stories, because what it does is that it sort of opens your imagination, saying that, wow, I'm being inspired, that perhaps I can do that as well. I don't know how to do it, but if someone else is doing it, then maybe I just need to learn it, right? That's where the education comes in.
Oh, definitely. I think the book you're referring to is Think and Grow Rich from Napoleon Hill, a classic. And, for those of you, it's been around for a long time. But again, these timeless principles don't change, right? So I think, that's great. So from education, let's move on now from the education and let's move to the next part, which is around goal setting, right? So we've got the knowledge, we kind of know which strategy we want to sort of go down, and then it's around setting goals. And I know you're big in terms of, and same for me, right? We start in a similar place, and I explain this to the mortgage brokers that I coach as well. We don't want to be transactional in our dealings. We want to focus on the bigger picture, right? And if we look at the KHI philosophy, it's contributing to your life. And so where we start is understanding your goals, because we want you to have a plan for your life. And if we want to be able to meaningfully contribute, we don't have to just talk about the now. We have to talk about a little bit further. And some people can't focus on what they're going to do in the next 5 minutes. So sometimes it's a stretch, right? I'm sure you would have these kind of goals, and they struggle, right? And so you may struggle at home too. But that's perfectly normal, right? And, I kind of talk about the analogy of setting goals a little bit about, and you're a cricket fan, right? And so let's say we play cricket and there was no stumps. Right? It'd be a pointless game, right? There's nothing to aim for. There's no way of getting somebody out. It's, there's no way to work out where you're going to bowl from. It's, because there's nothing to aim for, right? And so, similar to within your life, and again, we're talking about the ability to create freedom and give you choices in your life. But if you don't have a plan and you don't have some clarity in terms of what you're aiming for, you're just hitting the ball around, right?
Absolutely. We speak quite a bit in terms of the SMART goals, right? It's specific, measurable, achievable, realistic, timely. Very often clients sort of comes into ourselves and say that, okay, so we've sort of heard a name from somewhere or someone sort of has spoken, we want to sit down, we want to have a chat. Excellent. And Ross, I agree. Goals is that we speak quite a bit, right? We speak that goals are SMART goals is what we're after, right? Specific, measurable, achievable, and timely, right? Is that, and realistic, that we sort of say. So very often we've got clients who sort of come in our office and sort of say, well, we've received your details from our neighbours and someone else, and so we want to do a whole lot of things. I take them back and I sort of say, let's break down everything into a 3-step. Rather than going straight to the answer, is that I want to know a bit more about yourself. Let us utilize this section 1, which is more of a listening section, right? Tell us what you do, tell us what your assets are, tell us what your liabilities are, tell us a little bit on your personal side of it, your cash and shares and managed funds and so. So we take that as a more sort of a fact finders, yeah? And then at stage 2, we're very keen. This is where we sort of say is that, all right, let's quantify some of the things you wish to. And we hear some amazing things. Yeah, people want to travel around the world, and people want to spend more time with the kids, and we want a choice, and we want to hear all of those things, right? So we listen and listen and listen. Then we sort of say, okay, let's try to quantify some of those, right? When you sort of say you want to spend more time with your family, right? You want to have a choice within yourself. You want to do a charity of doing this. What does those all mean? So what is the financial abilities that we need for us to be able to do all of those, right? Because we speak about retirement. What is the definition of the retirement? It's that almost that freedom of the choice. Retirement doesn't mean we don't do anything. Retirement is just having that freedom of the choice, right? So we quantify saying that, okay, for you to be able to spend time with your family, and for you to be able to do all this charity work, and for you to be able to run around in the world and do everything which you wanted to do and help out different groups of people, tell us what's the level of the passive income that one needs to maintain this, right? And then we almost work backward, saying that, okay, if that is your passive income that you need, what's the level of the wealth that you need for you to generate that passive income? And more we become specific and we go deeper and deeper and deeper into the goals, it's not so much for us to give the solution to the client, it's the client and us, we work together in collaboration. Yeah. And very often when they sort of really see it within themselves, they say, okay, so we understand that's what we need to do as our goals, right? Last point which I'll say for me is that I work with some very high executives at different layers, right? They're all great, very successful, brilliant in many different ways. One of the stark initial observation that I had right at the beginning is that they're all smart, they're all animated, they're all charismatic, they're all sort of inspiring, all those things are there. But they all know where to go. They've got a very clear vision, right? An absolute common, very clear vision. They know exactly in their mind where to go. But they don't necessarily know exactly how to get there. That almost comes in second, not the other way around, right? I mean, how to get there is important. That's why you take support from different groups of people. That's why, and we'll discuss quite a bit with teams and so over a period of time, right? But we still come back saying that it is the goal that we need the clarity first.
Oh, definitely. And, having that big picture, especially when it comes to something like property investment, is so important because it's property is great because people understand it as asset class. Most people have lived in a property, they can feel it, they can touch it. Unlike something like the share market where they don't understand the balance sheets, the profit and loss, they don't understand the way that business is being managed, so it's an unknown, right? So the good thing about property is people understand it as an asset class because they've lived in it all their lives, right? But the thing with property, it is not a short-term thing, right? And so, we can't make decisions in property without thinking long-term because, I give some examples of the properties that I invested in, Brisbane over 10 years ago. And, every year I was waiting for growth, right? It seemed like the media was saying Brisbane is going to be the year, right, that we're going to see the growth. And, it probably took until COVID,
Yes.
and I was looking at the values, and within a 6-month period at the start of COVID, it rose by about 50%, right? In a 6-month period, the market went, and it just shows that had I sold in the initial 5 years, I wouldn't have got the gain, right? And I ended up selling one of the properties, and I think we did the numbers together, and we said, it was on cash return, it was a 43% compounding growth, right? Amazing. Over a period of time. In terms of, and as a annual growth on the value of the property is about 13.5% growth, right? And so you look at that, but had I, even 3 years before that, I wouldn't have got anywhere near to that level of growth, right? So it's understanding, these investments that we're making has to be based on your long term. Right?
Probably a very strong example on this is I was listening to, I was reading Warren Buffett's on a whole bunch of things the other day, and a statistics stayed with me is that how wealthy he is and how he has done. We hear it, right? But if we look through in terms of his wealth, literally about 95% of his wealth came in the last 15 years, 16 years.
Yeah, I read that he made the majority of his wealth after the age of 50. I'm just 60, about to turn 60 was 60, it? I'm just about to turn 50, and I'm like, oh, that's pretty cool, right?
But what's the second part of the statistics, right? 100% agree. There is a strong view about Warren Buffett that the last 5 years, 10 years, 15 years that he's been less active in terms of the open wall as opposed to the prior to it, right? So while he was less active, still everything's sort of gone up quite a bit. And why it has done is because of compounding impact. Yeah. Because of the fact that he's been investing over that many years. It's that having this big base, even if you have a small growth on a big base, is that your growth is rather high. And I think I relate that back to the property. When you speak about that cash on cash return side of it, the fact that you, let's say if you borrow 80% and have your 20% deposit, 5% incidental, you've got this other people's money, so to speak, the bank's money that you're investing, and any return that you're getting, one argues that you're getting 4 times of that return because of the leverage. You still need to do it right. Yeah. The product needs to be right and the purchase needs to be right? Because it can be a two-edged sword. But if you do it right over a period of time, it's the compounding. Exactly, and I think your point there leads us perfectly on to our next point, right? Which is strategy and structure, right? So I think we've gone through the education, we've gone through the goals, and now the next step on the pathway is that strategy and structure. And one of the things you just mentioned there, Munz, was around that, do I put a 20% deposit in? Yeah. Do I put a 10% deposit in? Do I borrow in a self-managed super fund? Right? And so, this is where the strength of a great team can come into. Obviously, as a mortgage broker, yes, the property is the vehicle, but, the vehicle without petrol is not going to get you anywhere, right? And so to make the vehicle move, we need finance, right? You don't see too many first home buyers paying cash for a property, right? So they need the finance, they need the strategy, they need the structure. So we know the goals, we know whether it be an income figure or a net asset position that we want to achieve. And now it's come out to, okay, with that goal in mind, what is the strategy, what is the structure to go and achieve those goals, right? And so once you've got that, being able to then have, like an investment savvy mortgage broker to have those conversations with becomes really, really important, right? Because, as I've found in my mortgage broking career, it may mean the difference between getting, say, an extra $1 million in property, right? And it doesn't sound like a lot, but when we sort of break that down over, a 20-year period, we're talking, that's potentially if, property, doubles every 7 to 10 years, right? And that's 2 investment cycles, right? That's potentially $3 million in capital gains by not having the right Yeah.
structure, right? And so this is where this becomes really, really important. Do you want to talk a little bit about that?
Absolutely. And see, if once you go into the strategy, is that you sort of say there's so many different strategies, right? And so many technical, non-technical, right? As an investor, I've seen investors are sort of buy and hold. All they do is to buy, hold it for a longer period of time, let the natural sort of market does it. I've seen lots of sophisticated investors who buy and hold, but they also manufacture the growth. Yeah. So you convert a garage into a carport, you change from a 2-bedroom to a 3-bedroom, you sort of subdivide and put a granny flat at the back, right? I've seen investors who are sort of buy construction, right? You actually subdivide, build a second dwelling, perhaps you sell away the second dwelling, you demolish the home, and you sort of build 4 houses and a house with a granny flat, house with a granny flat into subdivision as such. I've seen investors who sort of say that, well, we will only buy residential property because I see the growth behind it and compounding, it's our passion in there, and we don't sell away the properties. The banks are interested in us to buy it, right? So all those things is residential. I see investors who sort of say, no, my strategy is not residential. My strategy is commercial. Why would I buy residential property? You're buying about 4.5% gross return. Commercial property, I'm buying it minimum, say 6.5, if not higher, as a date of our net return, right? That's much better. Then I've got residential group that sort of say, no, you don't have as much capital growth in the commercial property. Commercial property sort of says, no, you still can manufacture the growth, right? Then I've got investors who would be flipping. So they are sort of buy, renovate, construct, sell it, buy, renovate, construct, sell it. I would have investors who would only be buying blocks of units. I would have investors who would only be buying houses. I would have investors, if we look through in terms of location side of it, that they would only be buying it in metro and suburban. I would have investors who would only buy in regional. I would have investors who would never buy in regional, right? I would have investors who looks into diversification and say that, no, it's not going for the next dollar value. It's more sort of looking into the longer term. So as an example is that when Tasmania did very well, I have investors who sort of says that, no, we don't want to invest in Tasmania, even though he was doing very well at a point of time 5-7 years ago, because the population of Tasmania is only about 500,000. But I would have investors saying that, no, I want to have that growth and then I want to sell it and take that bit of the funding so I can go to the next. Now, all those different things. Then you sort of say structure, right? We would have investors who would only buy it on individual name, trust and corporate entities. Someone may buy it on super fund. With the mortgage broker side of it, right? With the right mortgage broker, is that, as you said, is very often it's not only it's presenting the information, but it's also different bank has got their different policies, right? So it could be exactly on the same financial position. Based on the policy that you have, you could borrow more. You might have a sophisticated investor who sort of says, all right, I'm going to go with this particular mortgage broking or banking, where I'm paying 0.5% more interest. I don't like it. I'm paying 0.5% more, but that gives me a whole lot more leverage, and I've taken that 0.5% cost as part of doing the business, right? So when we add away all of those, is that from a new investor's point of view, the question is, good Lord, Munzurul, thank you for confusing, right? You've given 500 different ways of doing it.
Exactly.
What is the right way of doing it, right? But this is where the education comes in, is that in between all of those, and they're all correct in their own way, is that for one to find, that's what I want to do.
Yeah. And it depends on, someone's position when they're coming in, right? So I'll give you the example of a mortgage broker. Like if someone's got loads of equity in another property or got loads of cash, the ability to recycle their deposit out of the first property is not as important as someone coming with limited cash, right? So if we buy a property that is going to, and Perth was a perfect example. Perth was looking cheap from 2010, right? And personally, I didn't invest there until 2021 or 22, because there was no signs of growth, right? And let's say, for example, you were a first-time investor. You invested in Perth in 2010. You would have had to wait, 10 to 12 years to recycle that deposit, right? And so, there becomes merit. You mentioned like Tasmania, and it grew a little bit over time, and maybe that's not the best example, but if you buy in a market that is on the upswing, 12 months later, we can refinance that and get the deposit that you put out to then leapfrog you into your second property, right? And so, this is the types of thing when it comes to strategy and structure, there's not a one size fits all, right?
And we go back to that clarity of the vision. We go back to the goal, which was your previous point, right? Is that you can have all those different strategies. It would be good to know the different strategies and then bring it back home saying that is my goal. On the basis of my goal, yes, I've got 101 strategies, but I'll take a strategy number 43 and a strategy number 57. That sort of will get us in our goal in the low-hanging fruit manner.
And this is where it comes to our next point, right? Where it comes into the importance of a team. And, you and I, as you said, I did a lot of mortgage broking work for you, but we shared a lot of mutual clients along the way. And, part of the strength of the partnership is creating that team, right? So whether it be, and I know you and I sat around with buyer's agents as well, the three of us in a meeting with a client, like how valuable, right? Not only is that client getting the wisdom from myself as a broker and for you, but we're all on the same page, right? And I think taking that balanced approach, a lot of this confusion goes away, right? Because a problem shared is a problem halved. Is that what they say, or something like that, right? So you share it with the people within your team, and that problem, quite often there's a natural solution, right? And I know in sort of sitting around and sort of discussing things, there hasn't been too many things that we haven't been able to come up with a solution. And your finances, you mentioned, right? We would get to different hurdles. And as a mortgage broker, you would challenge me, right? And but we'd find a way, right?
Exactly.
We'd find a way. And again, we've gone down all different avenues, whether that be business bankers, private bankers, looked at different strategies with some second tier lenders. We go down different avenues until we come up with a solution which allows us to move forward, right? And so I think it's the same with that importance of having a team. So if you look at your journey and your client's journey, how important is having that team?
Absolutely fundamental in every single sense, right? Because no one person can be specialized on every single field. You can't, right? You just don't have that sort of time, if nothing else, right, for one to be specialized in a field. So you got to have the time. You got to have the team. One is that you got to have the team. Second is that you got to have absolutely the right team. What is the definition of the right team? The right team is the group of people who are not armchair investors, right? The group of people who are actually doers. They're in the open world, they're doing it as such. They themselves are property investors, they themselves work with many other property investors. It's that working knowledge behind them, right? That's fundamental. Second is, of course, the care factor behind it, right? That client first, and client is the only thing which is there, right? That bit of the care factor as such. So I say, if I look around the KHR team, we're being very, very blessed. Is that, yes, we've got quite a bit accounting experience. We also do quite a bit of internal accounting. We've got very deep knowledge in terms of finance. We've got a number of partners in terms of our legal side of it. We've got financial planning. We've got the insurance side of it. So we've got all of those different things, right? So whenever we sit down with a client, we always ask, do you have a good mortgage broker? If they have a good mortgage broker, we say, let's go with your mortgage broker. We never try to bring in any of the clients back to ourselves. If they have someone really good, we go with them, right? We even ask the question, do you have a good buyer's agent? If they have a fantastic buyer's agent, lots of relationship, we say we respect that relationship. We're not there to take away things from other people. We work on that abundance, right? When people sort of say that, okay, these are the support that we need, we bring them in within that group and we say, let's sit around with a group of experts where we are all listening. Who would be the team on your expert? Yes, you got to have a mortgage broker first. And I would even dare suggest mortgage broker probably comes in even earlier than accountant. You got to have a mortgage broker, right? You can have all the theory in the world, but if you don't have the funding, it doesn't work, right? you got to have an accountant in terms of your structure and tax planning, risk mitigation, and presenting to the bank in the right way with the mortgage broker, right? And then you got to have the buyer's agency side of it, right? And the reason we say buyer's agency is that Australia is such big, right? How do you sort of research in every single area? One can if one has the time, but how much time and what's the value of that time? What is the risk? Because you're doing that one transaction as opposed to a buyer's agent who sort of does that on day in, day out basis, right? So if you have that bare minimum team, the buyer's agency, the mortgage broking, and the accountant side of it, that's a good start.
Exactly, and that's a great start. And then there's levels,
Yeah.
right? And the great thing is, as you grow, your needs for professionals grow. I mean, one of the things that we've just added here at KHI Partners is an estate planner, right?
Yes.
And so in terms of, because, being in business for, the best part of 20 years now, our clients are getting to that sophisticated level where, it's not so much about them anymore. Yeah. Right, and Tyrone, who did a presentation to us yesterday, said exactly that.
Yes.
Right, it's about the legacy that we leave, and a big part of doing this is, property is an intergenerational assets, right? And so, that's the type of level that the more sophisticated people get to. So as the base level, but again, all the way up to providing that legacy for your family, are different services that you can create along the way. So, which I think then brings us back to, the final part, right? So we've been through the education, we've been through the goals, we've understood the strategy, we've spoken about the importance of team. But one of the things you just were speaking about when we were speaking about the importance of a buyer's agent was that opportunity cost, which brings us to our last point, which is around acquisition. Yeah. Right? There's a lot of people that, don't just spend 6 months in that education phase. They spend 6 years plus in that, and they get what we call analysis paralysis, right? In that 6 years, properties have almost doubled. If I'd only done something then, right? So there's a lot of people that, again, as you mentioned, they know where they want to go.
Yeah.
But they, with the busyness of life going around, they don't take action, right? And so, this is why that acquisition phase is really, really important. I used a buyer's agent for many of my property transactions. Why? I was in the market, I had access to all the research tools, but I was busy. Right, it's kind of like the builder that takes a couple of years to build their own house. I understood that, right, and so I understand there's an opportunity cost, right. So if you look at the example with $1 million property growing on average, I think the average growth over the last 25 years has been around 7%, right. So that's $70,000, right. So we break that down into a monthly thing. It's over $5,000 every month,
and that 70,000 is in the first year.
Yeah,
and then next year, if we use that 70%, we get a 7% growth on 1,070,000, which is higher than 70,000.
It's more like 6,000, right? 6,000 a month, right? So for every month you don't do anything, there's an opportunity cost, right? So some people think the buyer's agency fee may be expensive, and they don't realise what they're really paying for. But part of it is the opportunity cost.
100%. Absolutely. And say, Ross, when you say that years and years that you have utilised number of buyer's agents, I get to see so many properties with so many clients on an ongoing basis, I've taken some support from the buyer's agent. Paul Glossop is a good friend of yours and mine over the years, right? Good mate. He's got his own buyer's agency, and very good. And Paul helped me to buy a few properties a number of years ago. Many years ago, I remember that, probably about 6, 7, 8, 10 years ago now, that I wanted to go to that Moreton Bay sort of a region, and not many people were buying at that stage. Paul was, but it was sort of still at that beginning. So I went to Paul and I said, Paul, I know about the Moreton Bay, but I don't know about the Moreton Bay that much, whereas I know your research is there. So I've got a choice that I can spend next 6 months, 9 months of all my time devoting of trying to really get to know Moreton Bay. Still my knowledge will be much lower than yours because you're doing this as your research, right? And the challenge is that while I'm waiting for 6 and 9 months, is that the market is expected to move on quite a bit. But I can't really invest into Moreton Bay right now at this stage because I know some of the suburb, but I don't. So I went to Paul and I said, Paul, I want to buy this type of properties around that sort of a region. And if you find something, let me know. And as Paul does, is that he came in with a whole bunch of properties, and I bought a couple of properties through Paul in Moreton Bay, right, in Kippering and Marimba Down. Now, I look back now and I can give you the number now and what was the number at that stage. It has done very, very well, right? Yes, there was a fee for Paul in terms of doing this. I look back now and I said, does it really matter? It becomes so insignificant over a period of time. But even on day one, is that when you add that away, is that whatever the fees are, right? As long as the prices that we receive is somewhat reduced because of the negotiation, or the location or some other value proposition, you take all of those things as part of the perspective. But action taking is so fundamental, right? You can have all the education, you can have all the goals, you can have all the strategies, you can have all the team, so you got all four of them. That's great, right? But if you don't take any action, nothing happens, right?
Oh, exactly. It's exactly the same in the coaching business. I can give all the education, training, strategies, tactics, but if people fail to implement, they're not going to get the results. So I think it's true in business, it's true in life. It's the rewards go to the people who take action. And, again, sometimes we're going to work out that our action wasn't great. We were talking about one of our partners and, the first property she invested in wasn't great, but it was a lesson, right? And then we were joking how she would call you on a Saturday for every future property because, by making a mistake the first time, she's learned and she learned that I'm going to take advice. I'm going to get the right thing. I'm going to take, advice. I'm going to take the education. I'm going to use my team and I'm not going to make that mistake. So sometimes even taking action on something that isn't perfect has its lessons in life, and that's how we.
What's the pointism out of this whole story, right? Is that example that you've given this younger partner who said about those 1 or 2 properties didn't do the very best. It didn't, right? But even if we look through this, it still has done much better, as opposed to if she were to do nothing. Right? It's just that it hasn't done anywhere near as good. Anywhere near. She could have done much better with this. But even with that fact, just that action still has done somewhere, right? So one probably almost argue that any action arguably is better than no action. But then when we say any action, can we do better than any action? We can.
Definitely. And I think that's, a great way to end the sort of podcast with a fun little story. But, so we've gone through the property investment pathway, your pathway to freedom. Get yourself educated, set some goals, get the right strategy and structure, have that team in place, and don't sit around. Take some time to action and acquire some property. We're going to be digging in deep over the coming weeks on the Property Partners podcast. If they want more information, there's a couple of places that we can go. We're starting a private Facebook group where we're going to be providing lots of information. So that's going to be if you go to Property Partners, there'll be a Facebook group that you can join. You can also get some more information at the KHI website. What's that address, Munzurul? khipartners.com.au. Right, so go to khipartners.com.au. If you want to have a chat with myself or Munzurul, the best place to do that is to reach out. We'll contact you through the website and we will sit down, obligation-free meeting and discuss your goals.
What I'm really excited over the many weeks coming through is to go through with some of the topics you are sharing, some of the topics today, and we were exploring what we're going to discuss. and there's so many of sort of knowledge sort of nuggets in there. Look forward to.
Thanks, Munz.
Thank you very much.
Until next time.